Good morning, Colorado. It's a gorgeous day here in Denver, Colorado. It's really nice and cool. We had a little cool front coming in, and it's only like mid 80s. And I welcome you to Colorado Mortgage Home Loan Rate Update. And today is Friday, the 2nd of September. In the rates go up category, we don't have anything. The rates go down category, as I've been saying all week, unemployment was going to be the big factor. It came in unchanged at 9.1%. We actually need to have like 175,000 jobs in order just to keep up with the population growth. So we're actually going backwards. And when you also consider that this number does not count all the people whose benefits have given up and also the people that have quit even looking, this figure should probably be 16-17%. Hourly earnings decreased. It was expected to be up 0.2%. It actually came in at a negative 1%, tenth of a percent. Average work week is less. So in other words, people are working less, which means there's less money for them to make and to earn. The other big factor was the non-farm payrolls. The analysts were expecting 60,000 new jobs. There were none. Zilch. Nada, nothing. So we're going backwards. We need to create jobs in order to get the economy going. The Dow Jones, as I was preparing this morning, was down over 200 points. It was being negatively affected by all this bad economic news. The dollar, surprisingly, was getting stronger because it's considered a safe haven, and money is flying into our dollar, which is good. Here's what's going on in the mortgage-backed securities market, and as I've been saying for like the last 2 weeks, we've been trading in a very narrow range, and as I been saying, is depending upon what the unemployment figures were, would break up either one way or the other. And as I anticipated, the figures were going to be bad, which meant that we have a gap up. Now that's good because that means lower rates for us, but we'll end up having to close this gap and come back further down. But overall, this is very good. Now, if we continue to do this, we may actually break the support of 102. Which equals even much lower interest rates. The other day I showed you that half of my peers, other top producers, it was 50-50 as far as whether or not to lock or float. They're locking right now because of the improvement in the interest rates, and it's better to have a bird in the hand versus two in the bush. And here's what the lenders are actually doing. The majority of the lenders have improved their pricings by 0.35, which is very good. That translates into a lot of savings for you as a buyer or a homeowner when you're refinancing, and only 19 have actually decreased the pricing. But that is good news, and that's the reason so many people are taking advantage and locking their loans as we speak. So what are the market timing services recommending? Rate Alert, they've changed their position. They're more bullish. The past week they've been very bearish, thinking that the interest rates were going to rise. But you can see basically if you're closing within this week, go on and lock. Other than that, just float. And once again, expect the volatility because as I mentioned in the earlier, we're going to close that gap down. So rates will increase a little bit. Probably next week. Now the daily rate lock advisory, earlier this week they were saying, hey, if you're closing within 60 days, lock. Then 2 days ago they changed it to 20 days, and you can see that they actually changed it now to 7 days. So they're getting on board with what I've been recommending, that I think interest rates are going to continue to get much lower. In summary, as I promised, today was a breakout. We broke out of that narrow trading range. The Dow Jones is down over 200 points. The dollar is up against the euro and the pound. No jobs created. Biggie. That really hurts. The the general public. We need at least 175 new jobs just to keep up with the population, and we're not seeing that. So we're going backwards. Bank of America is also in trouble, and that's not going to be good for the economy either. The 10-year Treasury could break 2%. If that happens, it's going to mean lower rates still. As I mentioned, we also need to close that gap. And if we can get to that 102 that I showed you on the graph, and if we can hopefully stay above that, we're going to keep below that 2%, which means lower interest rates. Who knows? Maybe all the way down to 3. That would be terrific. Now the jobs. Obama's speech next Thursday and the Fed's meeting on the 21st of September. Obama's speech, I'm not really expecting much because thus far he's been talking and there's been no substance. The other part is the GOP hasn't been cooperating, and the fiasco with the debt ceiling just showed that the politicians really don't care. So we have to create the jobs. Now the thought of the day, today I am worse than I will ever be. That sounds negative, but what I'm trying to stress is each and every day we should get up and look at improving. And if we do that, we'll be better, we'll be richer, we'll be healthier, and we'll be happier. So, constantly strive to improve yourself. If you're looking to buy your Colorado home or refinance your Colorado mortgage or home loan, definitely give me a call. I'm available 24/7. And as always, I'm only want the best for you. Take care and have a great and safe Labor Day weekend.